Big news. Chase just flipped the script on how they approve business funding. If your credit score isn't perfect, this could actually help you get approved. But here's what most business owners don't realize. This change doesn't just affect Chase. When a major bank shifts their underwriting process, the entire lending industry watches very closely and follows suit within 12 to 18 months. If you don't know what's changing right now, you could miss out on a huge opportunity. Or worse, apply at the wrong times and get denied when you could have been approved. So stick around because I'm breaking down exactly what changes, who benefits, who loses, and the exact steps to position yourself to take advantage of this before everyone catches on. And if you're new to my channel, my name is Chess. I've secured well over 400K in total business funding for my businesses, and I help entrepreneurs and business owners like yourself secure funding for their business. So everything I teach here, it is based on real world experiences, either from my journey or from the hundreds of clients I work with across industries like e-commerce, service-based businesses, brick and mortar, and kind of everything in between as well. So today, we're talking about a shift that's going to change how you think about business funding forever. And Chase just made a major move that most people aren't talking about yet. So they partnered with a fintech company called Nova Credit. Not sure if you heard of them before. And together, they're rolling out a brand new underwriting system that fundamentally changes how they approve business owners for funding. And here's what's different. They're not just looking at your credit score anymore. Now they're also pulling real-time cash flow data directly from your business bank accounts. And this shift is being called the new age of underwriting. And it's not just a theory, it's actually live right now. And here's why this matters beyond just Chase. When the top five bank like Chase updates their approval systems, smaller regional banks, credit unions, and alternative lenders, they take notice of this. They typically follow the same trends within the next year or two. And this isn't just about one bank, it's a preview of what's coming across the entire lending industry. If you're a business owner who's been denied in the past because of credit issues, but your business is actually profitable, this could be the unlock that you actually been waiting for. So let me break this all down for you how this actually works because it's simpler than you think. I guess you could think about it like apps like Cash App, Venmo, or QuickBooks that verify your bank account when you connect them. You give them permission to securely link you to your account and they get a snapshot of what's coming in, what's going out. So Nova Credit is doing the exact same thing, but specifically for business funding decisions. So once you connect your business bank account during the application process, Nova Credit analyzes your monthly deposits and revenue trends. They also look if you have consistent payment patterns like your rent, utility, or payroll, your transaction volume from platforms like Stripe, Square, PayPal, Shopify, and your average daily and monthly balances. If you do have overdrafts or NSFs or negative balances, they're basically building a financial behavior profile in real time, not just relying on what happened months or years ago on your credit report. So let me give you a real example from one of our clients. We recently helped a mobile detailing business owner. His personal credit score was a little bit lower, is around 640. Not terrible, not strong enough to get approved through traditional underwriting though. However, his business was doing pretty well. He had a steady weekly deposit ranging from 5 to 10K consistently over 6 months, and his expenses were pretty predictable. And his accounts were never negative as well. So when we applied using the new cash flow underwriting method, he got approved for a 25K business line of credit, all without the banks even pulling his personal credit as the primary factor. And that's the power of this shift. Your business performance now speaks louder than your past financial mistakes. So before this change, business funding approvals mostly came down to one thing: your personal credit score. If you had a 700 plus FICO, low credit utilization under 10%, and no late payments, and your solid credit mix, you're golden. Banks love you. But if your score wasn't there, even if your business was bringing 50K a month, you'd still be denied because the system couldn't see your business's income. It only saw your personal credit history. Kind of makes sense, right? And that old system, it punished business owners who has medical debt, student loans that impacted their scores, or they went through divorce or bankruptcies a year ago. So having a thin credit file because they paid for cash for everything or they're new in the US and haven't built any credit yet could be the reasons too. And now Chase and soon many other lenders are looking at things like your monthly revenue trends over the last 3 months or 6 months, your recurring expenses like rent, lease payments, subscriptions. They want to see your consistent income through payment processors like Stripe, Square, Clover, you know the gist, or your cash reserves. How much buffer are you keeping in your account? Overall, the financial health signals that the credit scores are going to be completely ignored. This levels the playing field for a lot of business owners who have strong operations but imperfect credit histories. And I could give you another example from another client that shows this in action. A wedding planner that we work with recently had a solid seasonal income in peak wedding seasons from May through October. She was consistently bringing in 10 to 15K per month, but her personal credit score wasn't too hot. It was around 665. That's not bad, but not enough to unlock the premium funding options under the old system. So what we did, we connected her business bank accounts that showed the lenders her consistent high income months, your predictable expenses, and strong cash reserves during your peak seasons. She was approved for 3 business credit cards and a 15K line of credit with a credit score under 670. The key, we timed the application during her peak revenue months when her balances and her deposits, they looked their strongest. Timing matters now more than ever. Like I keep saying. Now let's keep it real because this new system isn't perfect and it does come with risks that you need to know about. First one is going to be your cash flow volatility. If your cash flow drops because of slow sales or delayed client payments or seasonal dips, it can hurt your applications, even if your credit score is decent. Number two, no business bank accounts equals invisible income. If you don't use a dedicated business bank account, the system literally cannot see your income. You could be making 100K a year, but it's all going into your personal account or being paid in cash. You're basically invisible to the new underwriting system. Number three, messy books. If you're mixing your business and your personal funding with your business accounts to pay for your groceries, personal bills, or random transfers, your financials will look very messy, unpredictable, and banks may see you as a risky and kind of pass on your applications as well. Very, very risky. All right, negative balances and overdrafts. If your accounts regularly goes negative or you're hitting overdraft fees, could be a huge red flags because it signals poor cash flow management. Lenders will also see you as a high risk, even if your revenue is strong. So let me share a tough but important story. We had a food truck owner who was absolutely crushing it. They were making solid money daily, great customer base, always busy at events and festivals. But here's the problem. Everything was off the books. No business bank accounts, no invoices, no digital payments, just cash going into the personal accounts and expenses being paid out randomly. And when it came to us and winning 30K in funding, we had to hit pause and explain the reality. To the banking system, this business didn't even exist. So it took a full reset. We helped them open a proper business bank account, start running revenue through the bank account as well. Use Square for your card payments to create digital transaction histories. Also, we separated the personal and business finances completely. After that, 6 months of that, we had clean banking data and they finally became fundable. Now, they're building real credit, accessing capital, and positioning themselves for long term growth. The lesson in all this, cash flow helps, but it has to be verifiable. All right. Here's exactly what you need to do if you want to take advantage of this shift. Step one, set up a business bank account. If you don't have one, open one this week. Run all business revenue through it. There's no exceptions for this. I personally recommend banks like Chase, Bank of America, or online options like Relay or Novo. All right. Step two, keep your personal and your business finances separate. No more paying for groceries or personal bills from your business account. I want you to keep it clean. The lenders are watching. Step three, use financial tracking tools like Relay, QuickBook, Waves, whatever works to help you keep a simple spreadsheet to help you track your cash flow, manage your invoices, or maybe even just stay organized. This makes tax seasons a lot easier too. All right, step four, time your application strategically. Don't apply when you're just paid out a huge expense or during a slow mo. Apply when your deposits and your balances are strong. ideally a good 30 to 60-day period of consistent income. Step 5 is going to be monitor your bank balances average. Banks look at your 30 to 60-day averages of your balance. If you're consistently keeping 5K plus in your account, that's a very strong signal. If you're hovering near zero, that's a very big red flag for them. So let me share one more quick win. We work with a client who runs a residential cleaning service. Her revenue was very good, but inconsistent from a week to week basis on bookings. So we coached her to improve her cash flow management, increased her pricing very slightly, and built up a buffer in her business account. Then we told her to wait about 2 full weeks or 2 billing cycles before applying. When we finally submitted her applications, her account showed consistent 8 to 12K monthly deposits, a healthy 7K average balance, and zero overdrafts. The results of all this, she secured 40K in total funding, a combination of business line of credit and 2 business credit cards with high limits. All because we positioned her with great banking data to tell the right story at the right time. And here's what I think is coming next. This move by Chase is just the beginning of all this. As more banks adopt cash flow underwriting, credit scores will matter less for business funding, though they're still going to matter. Your financial behavior will matter a lot more. How you manage your money day to day. So, business owners with strong operations but weak credit will finally have access to capital they've been locked out of for years. Traditional funding gatekeepers will lose power and data driven underwriting will become the normal. If you're staying ahead of the curve and if you start building clean, verifiable cash flow data now, you'll be in the best position when it becomes the industry standard. So here's the bottom line for you to take away. Credit scores still matter, but there's not the full story anymore. And cash flow is now the key part of how major banks approve funding. And if you're only focused on building credit while ignoring your bank account activity, you're missing half the equation. The businesses that win in the next era of funding are the ones that have clean, organized financial data, run their money through proper bank accounts, build consistent cash flow patterns, they know how to time their applications strategically, and that's basically it. Because that's the new game, and now you know how to play it. So look, if you need one-on-one help to secure 100K plus in business funding, or you want the entire process completely done for you, from strategy to applications to approvals, I'd love to help you out to get this done for you. So apply to join my mentorship program or my done for you service in the links in the description below or in the pinned comments below as well. I only work with serious business owners who are ready to take action. So if that's you, let's talk. And this Cashflow Chess, I'll see you guys in the next one. Peace.